The start of 2026 feels different. The noise that usually surrounds the crypto markets, the endless cycle of hype, the overnight liquidations, and the frantic chasing of the next shiny object. It has been replaced by something much more calculated. For years, the XRP community lived in the trenches of a legal war, waiting for a signal that this asset that they've held on to was more than just a line of code caught in the courtroom battle. That signal has finally arrived, but it didn't come from a judge or a retail influencer. It came from the top floor of the global financial establishment. Now, a research note from Franklin Templeton, a firm managing over $1.6 trillion in assets, began circulating through institutional desks before leaking into the wider public consciousness. Now, first, it looked like just another dry PDF destined for a corporate archive, but as researchers began pulling apart the language, they realized that this wasn't just a status update. It was a fundamental shift in how the biggest money in the world views XRP. They weren't calling it a digital currency or a speculative asset anymore. They were using words that suggested prominence, words like infrastructure and fundamental. Now, this shift is, at least in tone, is exactly what caught the eye of researchers who have spent years tracking the moves from retail speculation to institutional necessity. Now, the timing wasn't accidental either. It followed the late 2025 launch of the spot XRP ETFs, specifically Franklin Templeton's own fund, ticker XRPZ. Now, when an asset manager of this scale puts their name to a product and then publishes research that backing it all up, the game changes. They are no longer just observing the market, they are building it. Asset managers of Franklin Templeton's scale do not publish casual endorsements. Their public explanations tend to mirror how products are presented to professional clients. XRP, in this case, appeared as infrastructure. It appeared as a component with a defined role inside the digital asset portfolios. In my view, this is the inciting incident for the current market cycle. Now, we are seeing a pivot from if XRP will be used to how it will be priced once it becomes the global plumbing for the financial space. Now, the paper describes the XRP Ledger as a payments-first blockchain designed for real-time, low-cost settlement. While that might sound just like technical jargon we have heard many times before, coming from a $1.6 trillion giant, it serves as a massive stamp of legitimacy. It's the moment when the impossible price targets started to look more like math than a kind of theory on a whiteboard, right? They started to actually look like a projection of a new global standard. To understand why the Franklin Templeton paper is being treated like the holy grail by crypto researchers, you have to understand the scale of the player that's involved. Now, we are not talking about a venture capital firm or a crypto-native hedge fund. Franklin Templeton is a global titan with over 75 years of experience and roughly $1.69 trillion in assets under management. So when they move, they do not just participate in a market, they validate it for the entire world of traditional finance. Now, the launch of their XRPZ ETF on the New York Stock Exchange in late 2025 was the first domino. But the true weight of their endorsement lies in the specific language used by their leadership. They didn't just list XRP as a ticker for some people to trade. They described it as a structural necessity. Now, in the eyes of the institutional world, XRP has moved from being a token to being a component. Now, this distinction is vital because it shifts the conversation from price speculation to utility-driven value. Now, when a firm of this magnitude uses terms like fundamental, and they are, speaking to a specific type of audience of pension funds, sovereign wealth funds, and massive family offices, These are the entities that look for assets that can handle the real-world plumbing of global banking. Now, the research highlights that the XRP Ledger was built for one thing: the efficient movement of value. Now, by calling it a building block, they are effectively telling their clients that a diverse digital portfolio is incomplete without it. Now, this is the ultimate stamp of institutional approval that Ripple has spent over a decade trying to secure. Blockchain innovation is driving fast-growing businesses, and digital asset tokens like XRP serve as powerful incentive mechanisms that help bootstrap decentralized networks. Within a diversified digital portfolio, we view XRP Ledger's native token XRP as a fundamental building block. In my view, this is the moment that the retail era of XRP officially ended and the institutional era began. Now, my take on this is that we are no longer waiting for Ripple to prove themselves here. The world's largest asset managers have already done the due diligence for all of us. They've looked at the speed, the low costs, and the settlement finality, and they've decided that XRP is the asset that will bridge the gap between legacy systems and the future of finance. The secret success here isn't a price pump. It's the fact that XRP is now being written into the very DNA of the global financial system. To understand the magnitude of what is happening in early 2026, we have to look at the divergence between the old XRP and the new XRP. For a decade, XRP was the ultimate retail asset, driven by an army of passionate holders, community-led hype, and the narrative defined by a David versus Goliath battle against the SEC. Now, it was an era of moon talk and speculative fever, but the data from the last quarter of 2025 suggests that the retail era has been eclipsed by something far more substantial: a cold, calculated institutional pivot. While Bitcoin and Ethereum dominated the headlines for many years, professional money managers are starting to look at the scoreboard differently. Now, according to recent capital flow data, as 2025 came to a close, we saw a massive rotation. While Bitcoin ETFs recorded outflows of nearly $3 billion in November, XRP-related products moved in the opposite direction, pulling in nearly $666 million in new capital during the same period. Now, this wasn't a retail pump. This was the suits taking their positions somewhere else. Now, this shift is what kind of Sandy Carl, the head of digital assets at Franklin Templeton, identifies as a new structural reality. In her view, the market is finally moving past the binary choice of Bitcoin or Ethereum. Institutions are no longer just looking for a store of value or a smart contract platform. They are now looking for a specialized infrastructure that solves specific problems in the global commerce. XRP, with its focus on the $150 trillion cross-border payments market, fits that niche perfectly. XRP is entering its institutional breakout phase. We are moving in a direction where professional money managers are actively exploring alternatives beyond Bitcoin and Ethereum. The data coming in from ETF issuers is very encouraging, signaling a wide acceptance of XRP within traditional finance. My take on this is that we are witnessing a professionalization of the asset. In my view, this is the secret success that most people are missing. The asset is being de-risked in real time by the very institutions that once ignored it. However, it is vital to stay grounded here. While these institutional inflows are historically high and incredibly bullish, they don't guarantee a vertical line to triple digits tomorrow. The institutional pivot, it is a slow-motion transformation, not a get-rich-quick scheme. It is bullish news for sure, and it could be great for the long-term health of the ecosystem. But we do have to treat these developments as foundational, rather than just purely explosive. Having a plan that is more grounded has always been my approach here. I wouldn't completely disregard the higher price targets being thrown around by the analysts, but I would treat them as more long-range visions rather than immediate certainties. As always, never invest more than you are willing to lose. When researchers start using the word like incomprehensible, it usually signals one of two things: a complete detachment from reality, or a mathematical shift so massive that the human brain struggles to scale it. Now, in the case of XRP, we are seeing the latter. The impossible price targets aren't coming from anonymous accounts on social media anymore. They are coming from the analytical desks of Standard Chartered and institutional researchers who are looking at the liquidity requirements of a global settlement asset. To understand the math, you have to stop looking at XRP as a coin and start looking at it as a bridge. If the XRP Ledger is meant to handle even just a fraction of that $150 trillion that moves across borders annually, well, the current liquidity, at a price of let's say $2.50, it is mathematically insufficient. You simply cannot move billions of dollars in value through a pipe that can only hold millions. No, to facilitate the volume of the global banking system without causing massive slippage, the price of the underlying asset must, by definition, be significantly higher. This is the liquidity theory that has driven the most aggressive price models. Standard Chartered recently joined this conversation with a roadmap that, while more conservative than the triple-digit theories that circulate, still paint a pretty picture of explosive growth. They are looking at the market to capture potential for XRP within the cross-border payments sector and impact the newly launched ETFs, right? When you combine institutional buying pressure with a supply that is being locked up in escrow and used for actual utility, the resulting supply crunch creates a mathematical floor that is much higher than we are at today. XRP could reach $8 by the end of 2026. This target is based on the growing institutional adoption of the XRP Ledger for cross-border settlements and the significant inflows from the recently launched spot ETFs. This valuation implies more than 300% upside from the current levels, positioning XRP as one of the top-performing assets in the digital space. In my view, while the $8 target might feel like a bit of a milestone, the incomprehensible numbers like the $10, $50, or $100 marks depend entirely on how much of the legacy financial system actually moves onto the ledger. Now, my take on this is that we are witnessing a repricing of the network's capacity. However, we do have to stay disciplined. It is easy to get lost in the what-if math and forget that markets don't move in straight lines. This is bullish news, of course, and it could be great, but these higher targets should always be treated as long-term visions rather than a guaranteed of fast payday. Now, having a plan is more grounded, at least that is more grounded, I should say, has always been my approach with this. Right? If you're betting on the impossible, then you have to be prepared for the time that it takes to build that reality. There is a psychological trap that opens up whenever the math starts to look incomprehensible. It's the moment when the rational mind stops looking at the risks and starts looking at the finish line. In the XRP community, this is a dangerous place to be. We are currently surrounded by a perfect storm of bullish data. Trillions in assets under management endorsing the ledger, successful ETF launches, and a regulatory environment that has finally cleared the air. But this is exactly when the deep dark hole of speculation begins and becomes, I should say, the most enticing. You see, when you hear targets like $10, $50, or $100, your brain naturally starts to calculate what your life looks like at those levels. You start to treat that future as a certainty. But in reality, at least the reality of 2026, the market is that it remains a dispersion market. Success is not uniform, and while the institutional floor is rising, the path is still littered with shakeouts. We saw this clearly in late 2025 when XRP briefly swept into the $1.60 range despite record ETF inflows. It was a violent reminder that institutional interest does not mean that the price is protected. As with all overly hype-driven perspectives, it is still very speculative. Having a plan that is more grounded has always been my approach, although I would not completely disregard higher price targets. I would treat them as more long shots and long-term visions. You see, my take on this is that you cannot trade a long-term vision with short-term money. If you are overly leveraged or investing rent money because you think that the Franklin Templeton paper is a guaranteed ticket to wealth, then you are the exact person that the market is looking to flush out. In my view, the truth that we are revealing isn't that XRP is going to go to the moon tomorrow. It's that XRP is becoming a boring, structural part of the financial system. The danger of the deep dark hole is that it blinds you to the necessity of a grounded plan. Right? You stop looking at the actual data and you start looking at the confirmation biases in every single tweet. This is why I always emphasize the cheeky school mindset, education over emotion. Now you have to understand the why behind the movement, not just the how much. This is bullish news and it could be great, but it requires a level of discipline that most retail investors simply do not have. Now, as always, never invest more than you are willing to lose. The impossible price is only possible for those who survive the volatility required to get there. If XRP is the engine of this new financial system, then Ripple's stablecoin RLUSD is the high-octane fuel that makes it run. Right, one of the biggest pieces of the secret success puzzle is how Ripple has successfully bridged the gap between the volatile world of crypto and the stability required by global banks. Launched in December of 2024 and reaching a staggering $1 billion market cap within the first year, RLUSD has become a linchpin for institutional liquidity on the XRP Ledger. Now, this genius move of the RLUSD, it isn't just that it is a one-to-one USD-backed token. It's that it was built for a multi-chain world operating on both the XRP Ledger and Ethereum. In early 2026, we are seeing the fruits of this strategy. While other stablecoins are used primarily for retail trading, RLUSD is being integrated directly into the treasury operations of global firms. Right? Firms like BNY Mellon and Gemini have already opened the doors, allowing near instant compliant settlement that bypasses the friction of traditional correspondent banking. And when you look at the Franklin Templeton paper through this particular lens, the foundational building block narrative starts to make perfect sense. By having a regulated stablecoin like RLUSD acting as a stable leg for transactions, institutions can use XRP as a bridge asset for the actual value transfer without being exposed to the minute-by-minute price swings that usually scare off the traditional CFOs. Now, this is the dual asset strategy that is transforming the ledger from a speculative playground into a professional settlement network. XRP is one of the only chains that also has its own stablecoin that adds a new element to what they might be able to build. It effectively bridges the gap between volatile cryptocurrencies and fiat currencies, fostering a more stable digital asset ecosystem conducive of widespread financial adoption. In my view, this is where the real money is made, not in the pump, but in the plumbing. Right? Now, my take on this whole RLUSD thing has provided the regulatory blanket that conservative institutions needed to finally start moving significant volume on the chain. But let's also be clear, while this infrastructure is incredibly bullish, it isn't, or at least it is, I should say, a longer-term play, because having a plan that is more grounded has always been my approach, as I've said. Right? You have to recognize that building a trillion-dollar settlement layer takes time. I wouldn't completely disregard those higher price targets, but I do treat them as longer-term visions fueled by this growing stablecoin utility. It's a great kind of development, but as always, you should never invest more than you are actually willing to lose. Now, if you want to find the real truth in any market, you have to follow the assets, not the headlines. Now, while the price of XRP has faced the usual early year headwinds in 2026, a silent transformation is happening beneath the surface, a phenomenon known as a supply shock. Now, the data coming out from Glassnode and other on-chain intelligence platforms, it reveals a staggering reality. The XRP is being vacuumed off of the centralized exchanges at a rate that we haven't seen in nearly a decade. But to be clear, this is just the Western exchanges. The same is not to be said for the Eastern Asian exchanges. But as of early 2026, the amount of XRP held on those Western centralized exchanges has plummeted to only roughly about 1.5 billion tokens. This is an 8-year low. To put that into perspective, in early 2025, that number had sat at nearly 4 billion. Over on the Asian markets though, we have 16 billion sat on those centralized exchanges. So in just a few months, more than 2 billion XRP has been removed from those Western exchanges into cold storage or institutional vaults. Now, this isn't retail traders moving their bags. It's the result of the ETF vacuums, right? Every dollar that flows into products like the Franklin Templeton XRPZ or the Bitwise XRP fund, it requires a corresponding amount of the underlying asset to be purchased and locked away. The XRP balance on exchanges dropped by over 57% in less than 3 months, reaching levels last seen in 2018. This sharp decline coincided precisely with record exchange outflows, typically indicating strong accumulation by large holders who move tokens into investment products, thereby reducing the immediate sell-side pressure. Now, this, in my view, is the most bullish data point that we have when it comes to the kind of Western centralized exchanges. Now, when you have billions of dollars in institutional capital chasing a liquid supply that is shrinking by the day, well, the math for a massive price correction to the upside becomes inevitable. Now, my take on this is at least that we are kind of witnessing a repricing of XRP from a trading asset to a settlement asset. However, as with any overly hype-driven perspectives, it is very speculative, and while the supply crunch from the Western exchanges is real, it doesn't necessarily apply to the Eastern exchanges as well, where we see over 16 billion XRP sat on those exchanges. So again, we kind of have to balance it all out. It is a double-edged sword. But having a plan that is more grounded when it comes to these things has always been a great approach. Now, I look at the data as a kind of floor builder rather than a rocket ship. Now, I don't disregard targets like $8 or $13, especially when you see 78 new whale wallets amassing millions of XRP on a single day. But I do treat them as those longer-term visions. They are not going to happen tomorrow. The secret success here is that the institutions are literally leaving nothing on the table for late comers. And as always, you should probably think about consulting a qualified professional because, I'm not a financial advisor. I do say though, you should probably never invest more than you could at least be willing to lose, because these markets are incredibly volatile and you could genuinely lose everything. But pay attention, right? The liquid supply of XRP on Coinbase, Binance, etc., it is diminishing in real time. If you want to know if XRP is actually becoming the world's bridge currency, you have to look towards Singapore. While most of the world was focused on the price action of early 2026, a massive structural shift was formalizing in the Southeast Asian region. Right? This isn't a theory, it is a documented partnership between DBS Bank, Singapore's largest financial institution, Franklin Templeton, and Ripple. Now, this Memorandum of Understanding, the MOU, represents the first time a major traditional bank has directly integrated a tokenized money market fund with the XRP Ledger for the purpose of institutional lending and repo markets. Now, the secret success here is the creation of a 24/7 liquid loop. In the old world of finance, if you wanted to move value or secure a loan against your assets, you were restricted by banking hours and geographic friction. In the new world described by the Franklin Templeton research, institutional clients can now swap Ripple's stablecoin RLUSD for SGBENJI, or SG Benjai tokens, a tokenized version of the Franklin Templeton's money market fund, natively on the XRP Ledger. Now, this allows for near-instant rebalancing of portfolios and, more importantly, it allows these tokenized assets to be used as collateral for real-time credit. A DBS Bank MOU with Franklin Templeton and Ripple has tied tokenized money market funds to XRPL. This partnership brings tokenized lending into the institutional perimeter. Tokenized money markets funds, such as the SG Benjai token, are used as collateral to unlock real-time credit on the XRP Ledger. This enables 24/7 trading with low operational costs. This is the blueprint for the global settlement vision, in my opinion. We are seeing the XRPL transform into a layer where institutional-grade assets, not just speculative tokens, move with the speed of an email. Now, my take on that is that when a titan like DBS Bank starts using the ledger to settle repurposed agreements, repos, the argument that XRP has no utility becomes officially obsolete. However, we do have to remain objective. While this is arguably one of the most significant institutional developments in Ripple's history, it is still in its breakout phase. This is bullish news and it could be great, but it is again that long-term vision, that is still being built out. Having a plan to that, it's always grounded, is the best approach. Now, you don't just buy XRP today because you think that DBS will flip a switch tomorrow, right? You buy it because you see it as infrastructure that is being laid out for the next decade of finance. So it's very important that you do your own research. In the middle of a market cycle where every single research paper can send the price targets into the stratosphere, the hardest thing to maintain isn't your portfolio. It's your perspective, We've spent this investigation looking at the institutional mechanics and the incomprehensible math that could drive XRP to new heights. But there is a massive gap between a $1 trillion asset manager's 10-year vision and the reality of your bank account next Tuesday. And this is where most people lose the plot, They get so caught up in the global settlement narrative that they forget that they are participating in the most volatile asset class on the planet. This is why I've always leaned into the importance of communities that prioritize education over the adrenaline. And if you're just sitting on social media waiting for the next moon post, then you're not an investor. You are a speculator, The real work, it happens in places like our Discord and through our structured learning courses at cheekyschool.com. My take on all of that is that people who will actually make life-changing money in this cycle aren't the ones chasing the green candles. They are the ones who understand the technicals, the Elliott wave patterns, and the macro trends that define these shifts. They have a grounded plan that accounts for the fact that even a foundational asset can see a 30% correction in an afternoon. The secret success is simply surviving long enough to actually be right. You do that simply by treating this like a profession, not a lottery ticket. The Franklin Templeton paper is a signal, it is not a guarantee. It tells us that, at least where the puck is going, but it doesn't tell us how many hits we'll take before we get it in there, Having a plan that is more grounded is always the best approach in my opinion. I look at these high-tier kind of price targets as long-term possibilities, but my daily focus remains on risk management and building a foundation of knowledge that cannot be shaken by a single headline. This content today is for educational purposes only. Investing in digital assets carries significant risk. The information provided does not constitute financial advice, investment advice, legal advice, or tax advice. Past performance is not indicative of future results, and all opinions expressed are personal and reflect an investigative perspective on current market data. As always, never invest more than you are willing to lose. You see, my advice is kind of simple. Lean into the tools that are available. Use the Discord to vet your ideas against others, other maybe experienced traders, and use the Cheeky School to level up your technical understanding. The impossible price, it becomes a lot less scary when you actually understand the mechanics of how you actually get there. This, of course, is bullish news, and it could be great, but your survival in this market, it depends on your ability to stay disciplined while everyone else is losing their heads. We have reached the end of our data trail. We began this investigation with a resurfaced research paper from a $1.6 trillion asset manager, and ended it in the middle of a structural supply crunch that is quietly reshaping the top of the crypto market rankings. The question that remains is quite simple. Does the Franklin Templeton endorsement prove that these triple-digit impossible price targets are inevitable? Or does it simply prove that XRP has earned its seat at the table of legacy finance? The answer actually lies in a distinction between a token and infrastructure. For years, the market treated XRP like a lottery ticket, something that you would buy low and sell high to the next person in line. But as we move further into 2026, the institutional narrative has shifted. They don't see a lottery ticket. They see a specialized tool for moving trillions of dollars across borders with near zero friction. And when the biggest money managers in the world start using words like foundational, they are telling you that they aren't here for a quick trade. They are here because the ledger provides a service that the old banking system simply cannot match. The rapid growth of our ETF business reflects Franklin Templeton's commitment to staying at the forefront of innovation. The XRPZ offers investors a convenient and regulated way to access a digital asset that plays a foundational role in global settlement infrastructure through the transparency and oversight of an ETF. The secret success is that XRP has finally graduated from the world of speculative hype into a world of systemic importance. Now, my take on that is that while the $100 price targets might be the long shots or the long-term visions of the community, the $5 to $13 range is becoming a mathematical reality based on the sheer volume of institutional capital entering the market. Now, however, as with all overly hype-driven perspectives, it is still very speculative. You have to balance this bullish news with a reality check. Right? The road to becoming a global settlement standard is measured in years, decades, not in weeks. Having a plan that is more grounded has always been my approach here, right? If you've followed this investigation, then you know that the real edge doesn't come from predicting the exact top. It comes from understanding the floor. The floor for XRP has been permanently raised by the arrival of the ETFs and the validation of firms like Franklin Templeton and DBS Bank. This is a legacy asset in the making. So stay educated, stay grounded in the technicals that we discuss over at Cheeky School, and never forget the golden rule of the trenches. Never invest more than you are willing to lose. The impossible price is no longer a meme, it is a projection. Whether it becomes reality depends on your discipline. Now, you can do me a favor by hitting the like button, subscribing to the channel, and checking the video that is queued up on the screen. I will catch you all in the next one.